Hello, everyone. Thank you for joining us today and welcome to this educational presentation where today I want to talk to you about timing tops and bottoms. I know a lot of traders like to trade that way, picking tops and bottoms. I'm going to show you a unique and really high probability way of catching tops and bottoms. For example, if we look at this picture here in gold, GLD, this is the ETF that represents gold. This is a weekly chart. Now, someone just looking at this and just taking a eye view of the chart would say, well, not much happening here, kind of just going sideways. But with this technique that I'll teach you today, you would have known that we weren't going sideways in gold. It was actually forming some type of short-term bottom right here. And with the technique, it actually generates signals telling you where and when to get in. There was a buy signal was generated right here, and another one generated right here. This was a weekly chart, and you could have potentially captured upwards of 145 points coming into this month using this technique to buy GLD, or the ETF that represents gold. So that's what I'm going to be teaching you today, a really great technique for timing tops and bottoms. And everything you're seeing today is coming displayed from the PTS Primo charting platform. I developed and designed this with proprietary strategies so you could actually see and identify these tops and bottoms right there on your screen in front of you while they're happening in real time. So welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. If you're new to my weekly educational webinars, we're all about teaching you and educating you because in my nearly 5 decades of trading, that's what I feel is missing for most traders. It's not the perfect strategy or the perfect system or the perfect indicator or even the perfect market to trade. It's really all about educating yourself. Because what most traders do when they're not educated is they basically take themselves out of the game. They say, well, listen, I don't have enough money, I don't have enough education, I don't have enough skill, so I'll let someone else decide for me what to buy or sell. And this is basically what the industry is based upon. You going to a webinar and buying some $10,000 product that automatically spits out buy and sell signals, or signing up for someone's trade room or chat room where they automatically tell you what to buy or sell on a nightly basis. See, when you do that, you're taking yourself out of the game and basically telling the markets, I don't know what to do. I don't have enough skill, enough expertise or money, and so I'll let someone else decide for me. Now, that's what the entire industry is based on, and that's why it's been estimated that upwards of 80 to 85% of all traders fail. So what we do is try to put the power back in your hands by educating you all the things that I've accumulated in my nearly 5 decades of trading that have high levels of consistency, and then working with you so that you'll be ultimately able to make your own trading decisions. In my nearly 50 years of trading, these are the only traders that are still around, the ones that make their own trading decisions. They don't rely on someone else or something telling them what to buy or sell. They have a simple plan in place and they execute it on a daily basis. So this is what we're trying to instill in all of our students. I'm happy to say we have students around the world in over 115 countries and in virtually every state in the United States. So hopefully we can educate you today as well. Now, before we begin, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by using this technique for picking tops and bottoms, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And as I stated before, since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, if you'd like to get more education on a daily basis, a couple of different ways. Firstly, you can follow us on X, or formerly known as Twitter. There's our handle right there. I would suggest copying that down, abbreviation for Specialist Trading, at SPC LST TRADG. Every day I post between 5 or 7 different snapshots of signals that our strategies or techniques have generated. Also little bits of financial wisdom. So lots of great free daily education on X. Also, we are streaming this live on YouTube right now. So a way to get more content is to hit the subscribe button. If you're following us on YouTube right now, simply hit the subscribe button and you'll have a lot more content in the following days, okay? All right, with that stated, let's begin today's educational presentation. And I'd like to start out by something that my mentors said to me when I was actually struggling. I first started my trading career on the floor of the stock exchange, but the first year or two, I really struggled tremendously. And I remember my mentors, specialists themselves, saying, Steve, the markets are always talking to us, but we don't speak the same language. So what we need is a tool that translates that language for us. I mean, think of it. That's why it's so difficult to figure out what the markets want to do, because they're basically, it's like talking to someone from a foreign country. We have no idea what they're saying, even though they're trying to communicate with us. So if we had a translator, just the same way we would have a translator for another person, if we had a translator for the market, think how much easier it would be to understand what's actually going on. Well, we do have a translator. That translator is a tool that we call the PET-D. Now, this was first introduced to me some 45 years ago on the floor of the stock exchange where I worked. At the time, we called it the formula because it was basically a formula that you had to calculate by hand, almost on a tick-by-tick basis. So we've taken all of the hard work out of it for you. Let me share with you what the PET-D exactly is. Well, it's a proprietary algorithm. We're keeping it in-house because that's actually, as a favor to you, it's too complicated and too cumbersome to figure out. We don't want you to go through all this work. And by the time you finally figured out how to use it, you still got to get ready for the next bar that's going to be happening. So we've made it into a proprietary algorithm, and it's actually a color bar tool. It will color the bars either green or red. There won't be any other colors other than green or red. Now, one of the best ways to use it is as a signal confirmation tool. If, let's say, your strategy or your technique generates a buy signal, if that same bar is green, well, that's a great confirmation that most likely it's going to go up, if hopefully it's a buy signal. If you have a sell signal and that bar is colored red, well, there's a high probability that the PET-D confirmed and it's going to be going lower. But what we're going to be looking at it today, since it has dozens of uses, but today we're going to be looking at it as an early trend detector. We want to find out what the trend is, and it's going to tell us when the trend changes. Now, I know a lot of you will say, I thought we were looking at tops and bottoms. Well, think of it. A bottom is made when the trend changes to the upside, and a top is made when the trend changes to the downside. So that's the way we're going to be applying it today. Now, let's take a look at this older chart in Tesla. Now, most traders would say, well, Steve, I don't really need a translator. I can see that the market's going down. Well, this is one of the reasons why most traders fail, because they're just basically looking at a chart or looking at what the market's been doing. And they say, well, I have a perfectly reasonable idea what's going on. And just when they think they know what's going on, everything reverses and changes. So what if we could apply our translator? Well, this is the PTS Primo charting platform, okay? It's as simple as just clicking on the PET-D in our upper green strategy tabs here. We have all of our strategies and techniques. Just find the PET-D, click it on, and it automatically changes the colors. Now, when you see a series of red colors, it's telling you that the market wants to go lower. But as soon as you see a series of green colors, it's telling you it wants to go higher. So as you see here, the beauty of the PET-D is that it tells you, it translates for you which direction you should be trading. And once you know, you can apply virtually any technique that is in sync with that direction. So with that stated, showing you how powerful this PET-D tool is and how I've been using it almost every day for the past 45, 50 years, let's share with you a trading technique using the PET-D. We're going to go through the rules step by step, okay? These are the rules for buys if you want to go long or if you want to pick some type of a bottom. Firstly, price must be above the 50-period moving average. So as we look at this generic chart here, we see that price is above the 50-period moving average. This is telling us that the overall trend is up. Now that's good because we're in sync, but only with the overall trend. Now we go to step number 2. We want to apply the PET-D color bar tool. All right. So here's the regular chart. And now once we apply the PET-D, we see here that the majority of the bars are green. So that's telling us that the short-term trend is in sync with the overall trend because both want to go up. Remember, green, a series of green, mean that the market wants to go higher. If it were red, it would want to go lower. So the next step is we want to identify a PET-D colored red bar to be displayed. So as we look here, all right, so now we have a red bar. So this is telling us that we have things a little out of sync. Even though the overall trend is up, the short-term trend is starting to give us little translated signals here that it may want to go down. So we're not really sure what the market wants to do. And this brings us to the final step, which is we're going to buy when price trades one tick above the previous red bar. So in other words, we're going to look this as a buying at a buying opportunity, because if price trades above this red bar, most likely it's going to switch and go back into the green color bar mode and go higher. So let's track it. Okay, so let's see what happens on the next bar. Well, the next bar goes lower. You see, this is why we want to buy if it trades above, because if we had bought here on the close and it went lower, well, we have a big loss on our hands. So we're still not out of the game yet. So this means we're no longer going to buy above this bar. We lower our entry down to this bar. So now we're going to buy above this bar if it trades. As long as we're above the 50-period moving average, this is still a buy setup. And look at, well, we didn't trade above, but we're still red. So we're going to lower the bar down to here. All right, this is going to be our entry. So now, instead of buying way up here, if this does turn around, look, we're buying at or near the bottom. That's why we're talking about timing bottoms and tops. And there, look what happened. It traded above. Now remember, a lot of students have trouble with this. They'll say, well, Steve, don't we have to buy when it closes above? Nope. It only has to trade 1 or 2 ticks above for you to go long. So we are long right now. We've entered into the trade, and look what happens. You see how we picked the bottom by using this simple tool. And look how simple it was. There was no need to look at tons of indicators, overbought, oversold, convoluted logic, waiting for some guy in a chat room telling us what to do. No, we did it ourselves simply by applying the PET-D and the 50-period simple moving average. That's simple. All right, now let's look and see if we want to pick some type of a top for a sell. Well, we're just going to use the same rules, but we're going to reverse them. Excuse me. The first rule is we want to see that price is now below the 50-period moving average, because now this is telling us that if price is below, well, then the overall trend is down. And we always want to be in sync with the overall trend. We never want to buy if our buy signal is below the 50-period moving average. We don't want to do that. We only want to buy if we're above. And so since we're below the 50, we're going to be either avoiding the market altogether, or we're going to look to go short. Step number 2 is we want to apply the PET-D color bar tool. All right, here's the regular way the chart would look. Now that once we apply the PET-D, we see that all the bars are red. So the short-term trend, meaning the PET-D coloring the bars red, and the overall trend, meaning that we're below the 50, are both in sync. So this is telling us that most likely the market wants to go lower. But this brings us to the next step. We want to see that a PET-D colored green bar is displayed. That's what we're looking for. Okay, so let's see what happened on the next bar. There's our green bar, okay? So does this mean we go long right off the bat? No, because we're looking to short with this technique. So we just identified the green bar, which will bring us to our fourth and final rule, which is sell, but only when price trades 1 tick below that green bar or the previous green bar. All right, so this is where we're going to be going short. It has to trade below here because, sure, this may be a bottom and maybe it's going to go straight up. But if it does, we won't lose anything because we're only going to go short if it trades below. This is what we call our confirmation method, because it's confirming that we went below the green bar. All right, so let's track the trade. Let's see what happened. Well, the next bar, it went higher. So we didn't go short, but since it's still green, we can raise the bar. Okay, so now instead of going short at this lower price, we can go short at a higher price. Now we're getting in at a better price if it goes lower. Let's see what happened. Nope, still going higher. So we cancel this and move it up a little bit to here. Next bar, nope, still higher. So we cancel this one and move it up to there. The next bar seems just about the same low. So we'll keep the same entry point in place. And there, we went short. And remember, it does not have to close below. It simply has to trade below. So that's our entry point right there. And for the next 3 bars, nothing really happened. Now, as long as you have your stop in place and you're okay. Now, in the course, we teach you where to place your stops. We teach you different exit points. But in this case, you most likely still would have had a stop in place, because look what happened just a day later. Then it fell out of bed. Okay? Once again, there must have been some news or some announcement that caused it to gap down and to really fall out of bed. But isn't it funny how the pet D in this technique told us a full 3 to 4 days in advance to go short? That's the power of being able to use a translator and listen to the market, as opposed to what we said with the entire industry is based upon listening to an outside source, some guy on TV or some interest rate cut or some earnings announcements tell us this is what we should do now. Trust me, I traded that way 45, 50 years ago on the floor of the exchange, and it couldn't make me a dime. So I don't think it's miraculously supposed to start working right now. The best way is to get all your information from the chart in front of you. And now that you have a translator, you know what it's trying to tell you. Okay, so what I want to do now is share with you some recent technique examples, and I'll actually show you some advanced ways in which to apply this as well. And we're going to use some actually live charts using our PTS Primo charting platform. This is the educational platform, once again, I developed and designed with proprietary strategies that actually is developed to identify these and time these tops and bottoms. But please remember, since we're looking at live charts, remember, these are for performance results only, and they have no guarantee that any of the results that I'm about to share with you will be repeated in the future. All examples are for educational purposes only. All right, so let me just toggle over onto our PTS Primo charting platform. If you can see that right now, I have a number of stocks listed up there right now. And let's start off with this stock, ORI. It looks like it's all over the place, going up, going down, going up, going down. First thing we want to do is apply the 50-period moving average line. We call it the buy-sell line because it's literally telling us if we should be a buyer or a seller. Remember, if price is above the 50, we're only going to be a buyer. If price is below the 50, we're only going to be a seller. So let's apply it, click it on. All right, so for the initial phase of this chart, we were above the 50, and then we went below. See how this works in your favor when price is below? See how it's not in your best interest to be a buyer? Okay, now the next thing we want to do is apply the pet D right here. Click it on, and we see the colors change. So here we have price, and here's our red bar series. So let me just get out the little pointers right here. And as we can see, once we started having the red bar, we would have actually had buy signals right here above here and never traded. So we lower it down to here. We lower it down to here. Sorry for the not straight lines. But then finally, we did buy. This is where we would have bought right here. And look how the stock went up. Okay? Now, here's another example. You could have used this and gotten out somewhere around here. Here's another example where you would have been a buyer if it traded above. But look what happened after that. It traded below. Okay? Now, someone could say, but yes, Steve, look at it. It traded above there right here. So wouldn't I be a buyer right here? Well, ask yourself, where is price in relation to the 50-period moving average? Remember, we never buy below the 50. So we're never going to be a buyer here. All these prices, you would have been buying below the 50. So now what we've done is we've actually reversed. We're actually going to be a seller now. So you're looking for the first green bar, which would have been right here, and that's where you would have sold, okay? You would have gone short and been able to reap the profits right there. See how simple this was? I mean, we're talking about two really nice trades. You could have gone long right here, roughly about 44, went up a good 3-4 points, and gone short right here around 43, went all the way down about 5 points, just by using this simple technique, okay? Let's go on to the next one. This is APP. Okay, how could this technique have helped us? Well, first thing we do is apply the 50-period moving average. All right, once again, we're initially above, kind of oscillated below, above, and then we went lower. So what we want to do is apply the pet D. First thing we do is apply the pet D. And we have a couple of setups we could have done here. Let's use the first one to go long, because remember, price is green, the bars are green, and all of a sudden we start having these areas where we could buy. And this is where you could have gone long, right there. And you could have gone long basically at 685 all the way up to here, which is close to 740. All right. Now, as price went down, again, you could have gotten back in if you wanted to, but it never traded above And then once we're here below, it's too late. The prices are below, so we don't want to do anything. So we think, okay, well, maybe we'll go short. But it would have been the same thing here. If we had gone short using the same technique, you would have entered above. So this wasn't, even though it worked out really nice, this wasn't a good setup because remember, we want to be below the 50 period. So you would have had one good setup here, and that was just about it using this technique. Let's look at another one now. We're going to look at SNDK. Now we are above the 50 period moving average. So this is telling us the overall trend is up. And you see now why we tell our students never go short, never buy puts if price is above the 50. Because the odds are against you that it's not going to work out. Sure, every once in a while it may work out, but over time you'll give it back if you keep trading like that. Trust me, take it from someone who used to trade that way. My first year on the floor, that's the way I used to trade. I used to go short if I thought something was overbought, and it would keep going higher. Or I would buy if I thought something was tremendously oversold, and it just kept going lower. So what we want to do is be in sync with the market, not at odds with it. And we use our translator now, and we see that it's given us a couple of chances to go long SNDK. Now, the first one was right here. We had the green bars. Now we have our first red to buy above there. It never traded. Buy above here. It never traded. But right here is where you could have gotten long. And this was roughly about 225, and the market went all the way up to roughly 270. Now, you could have held on if you wanted to, or let's say you took a good 20, 30-point profit. Well, look what happened. It's still green, and there's our first red, so you could have gotten right back in right here at roughly 265, and it went all the way up to 500. Just using this simple technique. It picked the bottom right here, and it picked the bottom right here, okay? A very simple but high probability way to trade. Let's look at TME. Once again, where is price in relation to the 50-period moving average? It's below. So now do you know why we tell our students if price is below, do not buy any buy signal from any strategy? It doesn't have to be one of mine, it could be one of yours or someone else's. It's because the odds are against you that it's going to work out. I mean, this was below the 50-period moving average when price was roughly around 23. Look at it, went all the way down to 16. So you could have saved yourself that by trying to buy and look for a bottom. The best thing is just to go in sync with it. So the overall trend is down. What's the short-term trend? Click on the PTS and we see, well, we have a couple of green bars here. Let's just use this one because the other one was so close, okay? Let's just use that one. And here's our first green bar. And you could have gotten short right there at roughly 22 and ridden it down as far as you wanted to. Now, here's another one right here, a green bar to go short. Didn't trade below there. Now the next one. And you could have gone short at 18 and made a couple of points. Another example here. You see these two different points to get in. There's finally where it traded below the first green bar. And then one more. Here's another way to get in right here. I mean, I know this is an inexpensive stock, but it's all relative. It's just this technique in action showing you how simple it is. And there's another one being generated right here as we speak. So even if you didn't want to short, a lot of our students like to use these as exiting tools. If they just happen to be long, they could use this to get out, and they could have saved themselves a good 8 to 10 points on the downside. Okay. Let's look at HYMC. Okay. How could we have gotten involved in this? Look at this stock was trading around $5 to $7, and it went all the way up to 50. Traders always love to play the blame game and say, gosh, I missed that. I wish I would have known, but how would I have known? How did I know this was going to take off? Well, if you knew this technique, you could have known, because all we had to do was apply the PET-D, and we see that we have the series of red bars. Now here we have an entry point that would have taken place right here. Now, if you had a really tight stop just below here, you most likely would have been stopped out. But remember, you got to still get back in if it goes lower and the trade is still valid. You could have re-entered right here and held on as long as you wanted to, or once again, done the same thing here. There would have been an entry point. You could have held on or stop yourself out with a quick loss, but got right back in here and rode it all the way up. Now remember, in the course, we give you 5 to 7 different ways to exit, 5 or 7 different ways to place your stop. So that all comes within the course. But today we're only talking about how would one get into these, okay? Let's look at the next example, which is an entirely different market. This is a daily chart of the Australian dollar. Now, originally, price was below the 50-period moving average. So we would have been looking to go short the Australian dollar. So if we get our tools here, we see that there's our first green bar. We would sell below here. It never traded. So we raise our entry there, never traded. Raise our entry here, never traded. Finally, raise our entry here. That's where we got short, right there. And we could have had a nice little quick short. Now, as it started to go back higher again, now it's above the 50. So we are no longer going to be selling short. Now we're looking at it from a buyer's perspective. So now we look for the first red bar. There's our entry right there, never traded above. We lower our entry here, never traded. On the third chance, we lower our entry. That's where we got long. At 66.30, it went up about 100 pips. That's $1,000 potentially in like less than a week. Another chance to get in right here. If you missed that one, you could have gotten in right here and ridden this rally. If you missed that, here's another chance. You could have entered, lowered your range, and there's where you enter. Now, nothing really happened. Let's just say you placed your stop somewhere around here. Well, you're still in the trade, and you had all these different chances to re-enter. You could have re-entered right here or re-entered right here before the Australian dollar took off, okay? So here we picked a top, a short-term top. Here we picked a bottom. Here we picked another nice bottom, all without the help of someone telling us when to buy, when to sell, just relying on the translator to tell us when to buy and when to sell. Now, we've all seen what gold has done, right? We talked about gold, a weekly chart of gold. All right. Here's how you could have gotten into gold roughly last year. This was in 2025 without, having to listen to anyone, without having to worry about what's going on economically, just simply using this simple technique on a weekly chart of gold, okay? Here we have all green bars, and we're above the 50-period moving average. So the two trends, short-term and overall trend, are in sync. There's our first red bar. Now, this is a little bit more advanced, but what you would do is you would keep this here until it traded. Now, it took 1, 2, 3, 4 days to get up there. And you could have placed your stop anywhere, somewhere below. You still would have been in the trade, and you'd still be in the trade. But if you wanted to use the more conventional, you would have gotten in on the next bar and still been able to ride this nice rally. And if you wanted to hold on, you could have ridden it all the way up coming into this past week. So that's just one simple way how you could have gotten long gold. Or how about the market? We've all seen that the market has been continuing to go up. Now, we're not talking on a daily basis, but what about for investing? What about a long term? Let's look at a monthly chart, because this technique can be applied to any time frame, any market. So we're looking at a monthly chart of the spiders, okay? That is the ETF that represents the S&P 500. So let's see how this could have helped us be long the market. The same process, even though these are all monthly bars, we're above the 50. Here's our first green bar. This was in September of 2023, almost about 2.5 years ago. We placed our entry above that, but it didn't trade above, so now we lower our entry. We get a better price. And in November of 2023, a couple of years ago, guess what? We could have gone long and ridden this as high as we wanted to, okay? Now, let's say we took a profit, we're out of the market, we're waiting for the next red bar. Well, this was in March of last year. We would have entered above the first red bar. It never traded above, but since the next bar is red, so now we just lower our entry down to this. And right here in May of this past year, 2025, we could have gone all the way up until January, okay? This is a monthly chart. So trading is really simple. It's the trader who makes it more difficult than it has to be, because we're relying on things that I was using 50 years ago that really have not shown high levels of consistency. So this is what we're trying to instill in all of our students around the world, how to be consistent by relying on the only thing you should be relying on, and that's the chart in front of you. Now, as we go back to the regular charting examples here, let's recap what we shared with you today, okay? Remember, the PET-D is a proprietary algorithm. We keep it in-house so that you don't have to sit in front of your computer with your hand calculator calculating virtually every bar. We don't want you to do that and miss a lot of setups. So we've developed it into a simple color bar tool. One of the easiest ways is to use it as a signal confirmation tool. So whatever strategy you get, if that bar corresponds to the direction of the strategy, it's a high probability signal. But today we used it as an early trend detector, telling us when a market is about to roll over and top out, or when it's about to turn around and bottom out. That's how you time tops and bottoms. Remember, the markets are always talking to us, but they're speaking a different language. So what we need is an indicator that translates that language for us. And that indicator is the PET-D. So ask yourself, 2026 has just begun. I know you have all these hopes and dreams of how you want the year to go, but don't you think the PET-D can help your trading for the remainder of the year? I really think it could. So we have a great offer for all of you attending today and watching this educational presentation. We're going to offer you our roadmap for any market, our roadmap for success, the PET-D. This is our proprietary algorithm you can apply to any market, any time frame. We're going to throw in 2 continuation trading techniques. These are 2 other techniques that I didn't go into, as well as 2 pullback trading techniques. And we're going to include a trailing stop technique. So 5 different ways in which to apply it. Okay, you can use it to confirm your current strategy. You can build it a system based off the PET-D. And it's really that powerful of a tool that you can apply just so many ways. Now, everything you saw today was displayed using the PTS Primo charting platform. We made it to make trading simple. Everything was 1 click away. So till Friday only, we're going to offer you, if you sign up for the PET-D course, you'll get a full year free of the PTS Primo charts, okay? And the beauty about that deal is not only are you getting the PET-D, sure, but you're getting a host of other different techniques and tips that I've accumulated in my 5 decades of trading that you won't find anywhere else. Most of the things you'll find are from my years on the trading floor that are not on the conventional trading platforms that you see. So this is just the tip of the iceberg. Our enhanced buy sell line, 4 different ways to find out what the overall trend is. A strength of trend tool telling you when the trend is running out of steam or if it has more steam left in it. A signal scanner you can scan on a nightly basis for these PET-D setups. Entry levels, stop placements, auto-generated exit levels, and personalized tech support. As I said, this is just a fraction of what's offered on the PTS Primo charting platform. That is all yours free for a full year if you sign up. Now, I know a lot of people say, well, you know what, this is great, but I really don't need this. I really don't need, I can kind of figure out when the PET-D is going to change from green to red. Oh, really? Well, if you don't think you need the PET-D, let me share this chart with you. This is a chart of the actual S&P 500. We're looking at it. See, the chart was going up, right? Had a really nice upward trend. And then this happened. Now, a lot of traders, myself included, before I applied the PET-D, thought, well, this is just a really oversold condition. It's about time to go long. Maybe we should buy here. But once I applied the PET-D, what did I see? Clicking on the PET-D on our platform, 3 consecutive red bars. That's more than enough to tell me that, no, the market was telling me it wants to go lower. I'm not going to stand in the way of the market. And just based off these 3 PET-D bars, guess what time frame we were in? Well, if you look at the bottom of the chart, this was March 2020. Do you remember anything come to mind around March 2020, the COVID crisis? Well, the market was telling us through our translator to get out because after that, it fell 940 points. Now, it says plus here because most of our students went short and they gained 940 points to the downside. But that was actually over 9,000 Dow Jones Industrial Average points just by using this PET-D. So this is what we mean when students say, well, I really don't need it. I kind of have an idea when the market's going to change. Well, yes, but how do you know when the market's telling you it's not here to change? It's going to continue going in a certain direction. Do you now see why you absolutely need the PET-D? That's how powerful it is, and that's how much it can help you. My trading really went into hyperspeed once I started to apply the PET-D. Okay, so here's our roadmap for success, our roadmap for any market, the PET-D trend detector, along with a full year of our platform. Now, this will normally sell close to $5,000, but here's what we're going to do. well, if we add the platform, we're talking about $6,200, $6,159 or so. We're going to discount that for a limited time only down to $39.95. You're going to save $21.64, almost $2,200. But get this, we're also going to throw in another way in which to get the Pet D trend detector along with the platform. We also have payment plans available. Pro Trader Strategies says that they will offer payment plans where for a fraction of that $39.95, you can still be up and running as early as today. All you have to do is put a fraction down deposit, and you can establish a payment plan with Pro Trader Strategies, and you can be up and running as early as today. So two different ways. You can buy it in full for $39.95, or you can establish a payment plan for a fraction of that cost, and you still get a full year of our platform. Here's how to take advantage of this. Contact Pro Trader Strategies. They're my sister site. They're in charge of all the discounts. They're in charge of all the tech support. I would highly recommend giving them a call at area code 310-598-6677. They have traders over the phones right now. They'd be happy to take your order or to give you a quote if you want to establish a payment plan or answer any question that you may have. Now, that link you see at the very bottom is the link that will take you to the sign up or info page. It's not a live link, but if you click on the little chat box there in the Zoom icon tray, you'll see that they have a live link posted there. So all you have to do is go into the chat box and you'll find the live link, okay? Now I'm going to reserve the last couple of minutes here for any questions that you may have. If you have any questions concerning what I went over today, please don't hesitate. Just go to either the chat box or the question and answer box, and I'll be sure to answer them as soon as possible. First question, will this strategy need to be updated or recalibrated? No, the Pet D is the same. It's been since I was using it, 45 years ago when I was first introduced to it. So no, you will not have to recalibrate and resubscribe every couple of years. Maybe like you think like an iPhone, I've got to update it. No, it's not like that. The Pet D stays where it is, and we go through everything with you in the course, teaching you exactly how to apply it. So there's nothing you need to know about that, okay? How does this strategy perform in different markets? Well, one of the best things about the Pet D is that with the techniques that we teach, it has a really good capability of keeping you out of these choppy markets, because in a choppy market, no one is really successful, because that's when, things go up, you buy, and then they go down, you get out, and they go back up again. You usually see a lot of this in the summer months. But the Pet D, if we're using this technique, the colors will oscillate back and forth between green and red, so a lot of the signals will not be generated. Therefore, they'll keep you out of a lot of the whipsaw or sideways markets. So no, you don't have to worry about that, okay? Now, another thing as well, I didn't go over, but this is probably the most asked question, so I'll just answer it before anyone asks it. If you're having trouble, difficulty, or if you just want me to check your work, one of the best things we offer is my private email address. It's the next best thing to having me sit next to you at your trading desk. So what you do is just simply email me a snapshot of a chart or just a question, whatever you're interested in, and me explaining to you, and I will answer it probably within the next 24 hours, sometimes in the next 5 or 10 minutes if I'm not that busy. So it doesn't go to an intern, it doesn't go to a sales representative, it comes directly to me, not to an assistant or anything, so I'm the only one that sees your email. So this is the best way to actually learn, to keep in touch with us, and every student of mine will get access to my private email address, okay? So this is a great, great offer. As I said, I use the Pet D every day. I used it today. This morning, I trade the E-mini futures. This morning, I had 2 trades. One was a break even and one was a winner, both applying the Pet D. So they really can be applied to any market in any time frame. I like to use it on the E-mini futures, but you can use it, as I said, it makes absolutely no difference, okay? All right, as we close, remember, give Pro Trader Strategies a call, even if you're just considering or have some questions or want to get a quote on some type of a down payment structure. Give them a call at 310-598-6677, and they can establish a payment plan for you right away so you can know exactly what you're looking at, all right? If there are no further questions, as we close and take one last look at our disclaimer, I just want you to know that Pet D is probably one of our most powerful tools we have. I use it on a daily basis. And on top of that, probably one of the most popular tools we have because it's used around the world. And that's just, that's just to the validity of how successful and how powerful it is. So come on board, take advantage of this great offer. And in closing, I hope to see you all in the PET D course. Thank you so much. I'll see you later. Bye-bye.